Is the Bank of Canada done cutting interest rates? Well, according to economists at RBC and several other major banks, that's looking more and more likely. And if that's true, it could pay off in a big way for buyers who have been watching the housing market and patiently waiting for the right opportunity. As for sellers, this might not be the news that they want to hear, but it might be the news that they need to hear. To explain what I mean, let's rewind to June of 2024. That's when the Bank of Canada finally started to reverse course on interest rates. Before that, they had spent nearly 2 full years aggressively raising the overnight rate in an effort to combat inflation. In total, there were 9 rate hikes between 2022 and 2023, bringing the overnight rate up to a peak of 5%, one of the fastest and most dramatic tightening cycles we've seen in decades. By mid-2024, with inflation cooling and economic growth showing signs of slowing, the Bank of Canada made its first move in the other direction, a modest 25 basis points cut in June. That initial cut was followed by 6 more rate cuts over the next 12 months, gradually bringing the overnight rate down to 2.75% by mid-2025, where we are today. On paper, each of those cuts improved affordability. Mortgage rates edged down, monthly payments got slightly more manageable, and for buyers who had been priced out at the peak, things should have started to look a little bit more hopeful. But what actually happened in the market tells a little bit of a different story. Buyer activity stayed slow, and home prices continued to trend downward across many markets. This left sellers in a tougher spot, still hopeful that a wave of buyers would come, but facing a market that wasn't responding the way it had in previous cycles. So they were forced with a tough choice: accept the offers that were coming in, often lower than they had hoped for, or take their home off the market and wait for things to turn around. Some pinned their hopes on a better fall market in 2024, others held out for spring of 2025, expecting a seasonal bump. But this year was different. Our spring market was underwhelming, short-lived, quiet, and disappointing for a lot of sellers. Even so, many of the conversations I had with sellers and other listing agents were still there could be another rate cut coming that might bring buyers back and push up prices. But if I could show those sellers one thing, it would be this chart. We've had 7 rate cuts and no meaningful upward change in home prices. This is the reality. If 2.25% worth of cuts didn't turn things around, another 25 or even 50 basis points probably isn't going to either. The current overnight rate is 2.75%, which falls right in the middle of what the Bank of Canada calls the neutral range, which is anywhere between 2.25% and 3.25%. In this range, the bank isn't actively trying to stimulate or restrict the economy. It's essentially more hands-off. Even if we see another small cut later this year, we're still going to be sitting inside of that neutral zone, and that's why many economists now believe that the cutting cycle is done. If we get through the July rate announcement with no cut and sentiment continues to shift towards the "we're done" attitude, then sellers and listing agents won't have anything left to justify the mindset that prices will be going up and that there will be some flood of buyers. And while that may sound harsh, I honestly think that that's for the best, because right now, some sellers are still holding out for higher offers that just aren't coming. And the longer they wait, the more they risk chasing down the market. On the flip side, if you're a buyer who's been watching from the sidelines, unsure of what to do, you're not alone. That uncertainty is part of why buyer activity is still slower, why spring didn't take off like we expected, and why prices are continuing to cool despite improved affordability. But if you're prepared and you've got savings, a pre-approval, and a plan, this could be a great time to keep a close eye on the market. Right now, some mortgage rates are as low as 3.9%, and sellers are increasingly open to negotiation. We're likely heading into a period of slow, steady market correction, and unless something changes drastically, which there's no real sign of right now, the market is going to continue to favor buyers. That doesn't mean that everyone should rush out and buy a house tomorrow, but if you've been waiting, saving, and preparing, this might be the kind of window that you don't notice until it's already passed. Because the truth is, when the market is correcting, it never feels like the perfect time to buy. There is uncertainty, there is hesitation, and there's always the question of what if prices drop a bit more? Historically, the buyers who make their move during quieter markets and act while others are sitting on the sidelines end up negotiating better prices and finding the real opportunities, and are often the ones who walk away with the best value. You don't need to rush, but you do need to pay attention, because by the time the market gains confidence again and things do eventually start to pick up, whenever that may be, the best opportunities are usually already gone. Right now, there's less competition, more choice, and sellers who are starting to come to terms with where the market's actually at, not where they wish it was. If you're thinking about selling this year, the good news is homes are still selling, and a smart, well-prepared approach can absolutely lead to a great result. The key is staying ahead of the market by being realistic and responsive to what buyers are seeing instead of waiting on cuts or hoping for a shift that may not come in your timeline. If you like the information in this video and would like to follow everything happening in our real estate market, especially here in Durham region, please hit that like button and subscribe to the channel. You can also book a call with me using the link in the description if you have any questions about our market or buying and selling a home here. Thank you so much for watching. I hope you found this video helpful, and I'll see you in the next one. Bye!